Good morning, viewers. It's Thursday morning, February 6, 2025, and I'm your host, Sunil Thakker, of Sunny Talks Money. Welcome to ST Money's Business News, where we provide you the latest and updated 5-minute stock market wrap. But before we roll on, please do subscribe, share, and like this video. Thank you. And now, let's roll. After trade war fears ballooned early this week, an old reliable earnings season retook center stage in markets on Wednesday. All three major indexes notched modest gains on Wednesday, rebounding from declines earlier in the session as investors brushed off disappointing Alphabet earnings and weighed the prospect of future interest rate cuts from the US Federal Reserve. The Dow Jones Industrial Average led the pack, climbing 0.7% or 317 points, while the S&P 500 rose by 0.4%. Investors pored over quarterly reports from Google parent Alphabet and chipmaker Advanced Micro Devices, both of which disappointed Wall Street. That dragged on the tech-heavy Nasdaq Composite, which eked out a 0.2% increase to 19,692. The relatively muted trading suggests investors have calmed the nerves since President Trump threatened wide ranging tariffs against America's three largest trading partners. Trump's tit for tat threats with officials in Canada and Mexico have receded for now. At the same time, China's response to tariffs was considered by Wall Street to be fairly tame, with new levies imposed on slim slice of American goods. On the data front, investors are looking ahead to the January non-farm payrolls report expected to be released on Friday. US services sector activity unexpectedly slowed in January amid cooling demand, helping curb price growth, a report from the Institute for Supply Management showed on Wednesday. 8 of the S&P 500 sectors traded higher, with real estate leading the gains while communication services fell almost 3%. Google parent Alphabet dropped 7.3% after posting downbeat cloud revenue growth on Tuesday and earmarking a higher than expected $75 billion investment for its AI build out this year. Some AI related stocks showed signs of recovery after being rocked last week following the soaring popularity of a low cost Chinese artificial intelligence model developed by startup DeepSeek. Nvidia, which registered one of the biggest losses, rose 5.4% on Wednesday. Broadcom also rose 4.3%. Advanced Micro Devices, meanwhile, fell 6.3% after CEO Lisa Su said that company's current quarter data center sales, a proxy for its AI revenue, would drop about 7% from the previous quarter. Shares of Apple slipped 0.1% as Bloomberg News reported that China's antitrust regulator was preparing for a possible investigation of the iPhone maker. Uber Technologies dropped 7.6% after the ride hailing company forecast current quarter bookings below estimates. Fiserv advanced 7.1% as the payments firm beat estimates for fourth quarter profits, helped by strong demand in its banking and payments processing unit. Metal stocks surged 15% thanks to better than expected results that included a jump in Hot Wheels sales. FMC Corp plunged 33.5% after the agri-chemicals producer forecast first quarter revenue below estimates. Johnson Controls jumped 11.3% as the building solutions company named Joachim Weidmanis as Chief Executive Officer and lifted its 2025 profit forecast. In other Wednesday's market action, Treasury yields declined with the 10-year settling at 4.421%. The Treasury said it wasn't planning to set up debt issuance anytime soon. US oil prices fell. Benchmark futures retreated 2.3% to $71.03 a barrel after domestic crude stockpiles grew more than anticipated. Gold prices rose again. Futures surpassed $2,900 a troy ounce in intraday trading for the first time and ended the session at $2,800 $871, another record close. Bitcoin prices slipped below $98,000. The CBOE volatility index, known as Wall Street's fear gauge, dropped 7.9% on Wednesday to 15.85. Today's key event includes US initial jobless claims and Amazon earnings. That's it for today, folks. I will see you again tomorrow morning. Happy investing, stay inspired, and remember, it is all about money.